Hello traders, Gary Wagner here. Just about 20 minutes left in trading. That means it's 10:40 in Honolulu, 3:40 in New York. It is Monday, 11th day of January 2015. We're looking at trending markets and a Dow Jones Industrial Average, which opened stronger, traded lower most of the day. But as we go into the last half hour of trading, we are staging a rally in the market. I think this could be significant because we have a couple of factors at play. First of all, we had the Chinese market under tremendous pressure, I believe selling off another 5% today, but we didn't see follow through in any of the European markets. We saw some selling pressure coming into the markets earlier today, but as you can see, if we close up in this area, we're going to have a nice close on the day, 16,437.23, up 90 points on the day. Now, what's most interesting is what that has done to the Standard & Poor's. Of course, we're going to want to take a look at oil, but with the S&Ps are now up 8 points at 19,1975. This, of course, being the E-mini, 1892.50 on the low, 1929 on the high, so we're about 9 points off of the high. And as I said, up about 10 points on the day. Now, let's go ahead and pull up a daily chart so we can look at some key levels and see where we stand within the entire scope of the marketplace itself. First of all, markets have been under pressure. There's absolutely no doubt. Solid break below the 200-day, solid break below the 50-day. That's not really all that surprising. When we look at the different levels that we could have expected to find support, we, of course, looked at about 2003, that being a 38% retracement. 50% retracement, as I talked about, I don't believe is as important. It's not a straight fib number, 1970 and then 1937. So last week we wanted to see, would this market in fact find any kind of support at the 61% retracement level, which of course is 1937. Thursday's action certainly didn't bode well for that because we had the market actually closing below that. And then Friday we had a further sell-off. It attempted to stage a rally. You can see that by this long line here. We'd have to look at either quarter charts or half-a-day charts to see if that came in the morning, afternoon, or the afternoon session. And then today, as I said, we did hit these lows right at around, what was that, 1890, somewhere in that area. You can see these lows here. Market opened just above that 75% retracement level, and that's the number that we're looking at because 75% retracement is about as far as you want to go to see any kind of a market move to the upside, correct, and then expect it to still be in any kind of a bullish model. You really want 75, 76% retracement to kind of be the area in which it ceases. We certainly got that. We did not put out a recommendation. We are looking for a place to buy this market. Now, I listened to the pundits on the various financial news networks, and many of them are talking about why they expect this to be a bear market. My sense is that we're not going to go into a bear market, that we are having a recovery of our recession, but that recovery is a very, very slow recovery at best. And it is for that reason that I believe we're looking for points to buy this market rather than sell it. So many attributing the lower price in the equities markets today to oil being under pressure. We'll look at that in a second. But of course, we just talked about that in the gold forecast, that being down about 6%. But NASDAQ, that is trading higher now, up over 0.5% on the day, this being the NASDAQ 100 E-mini futures. That is also trading higher. And then as we talked about a little bit, crude oil under pressure, still really dramatically near the lows, off about $1.84 per barrel, off about 5.5% on the day, 31.32. And the dollar only slightly higher on the day, although it is gaining some momentum, up about 1/3% at 98.80, which is putting it just but under a level of resistance. And to me, it's a fairly minor level because a major level of resistance is going to come in at 100, minor level being at 99, and we're just shy of that at 98.80. So there's absolutely no doubt I like the kind of relief rally that we've just seen staged as we go into the close of the market with about 10 minutes left in trading. If this area holds, and this of course being the 76% retracement level at about 1900 on the S&P, that's going to signal a tremendous indication that we want to get long this market and see how much ground it can make up. Should this market not be able to hold this particular level, of course, I'm putting major support at 1900. And then, of course, our next real level that we would watch, should the market come under pressure, has got to be about 1860. And that, of course, is based upon these lows right in here that we had, this being the August meltdown right in here at about 1831, 1860. So those would be the low areas that I would watch if, in fact, we do not find support in this area. The reason for holding off on actually putting in a play is one day is a very, very short moment to say that we have absolutely had some kind of a key reversal in the market. As this market came down recently, we did have one day, wasn't a solid day at all. Look at a very, very small bodied green candle. This is not that large of one, but it is a recovery candle. I'm much more comfortable seeing a recovery like this with this large engulfing bullish. But if you take a look at this particular area right in here, let me go ahead and circle it. Now, it was a minor relief rally after hitting these tops up here, but you can see a very, very similar candlestick type to the candlestick type that we're looking at now. In other words, making new lows on the session and coming back to close in positive territory, followed by another day tomorrow. It would look something like this, and that would be a pretty solid indication to get long the mini S&P 500. This has been Gary Wagner for Trending Markets. We'll talk to you tomorrow on Tuesday for another daily update and review. Bye-bye.